Hello and welcome to this market update on Bitcoin. Yeah, we saw some very harsh price action in the past days. A lot of people got liquidated. A lot of people are terrified by this market structure we have here. I can understand why, because it's turning bearish. And if you're not used to bearish price action, well, this could be frightening to some degree. However, we have to take into account we're still in a bull run. We are still maintaining long-term trend. We are seeing strength by bulls. I know right now price action, the bears are in control right now. This is true. But when you look at this chart, we haven't really lost anything yet. Whenever you see bearish or when you see an indication of a potential trend change, a trend shift, the thing you want to look at is what do we lose or gain? So what are we losing right now? What did we lose with this kind of price action? It was devastating for a lot. Many people are calling bear markets right now. But what did we lose? What kind of levels and zones did we lose that were or have been important to us? So we had this high over here. We gained it, but we lost it right away. As you can see, this price action at this level, it didn't manage to stay above. Let us zoom out a little bit. And here you can see we had a weekly close above, and then the weekly two candles later, the weekly closed below again, then above again, below again. So it was a battle zone. It wasn't really ours to begin with. We didn't lose it because we didn't gain it really. It was a battle zone. It was even a battle zone over here, as you can see this. So 57, 57.5, everything above was never support. Maybe on the lower time frames, but not on the higher time frames. So this is not what we lost. What did we lose? We are having a very, very strong level here, as you can see. Look at this. Confirmation of resistance, confirmation of support. This failed breakout here. Confirmation of support, confirmation of support. So this is actually a support level that was important to us. However, we lost it with this recent daily candle over here. But it's not the first time. As you can see, we lost it over here as well, and we got back above. We lost it here and got back above. Yeah, we lost it here and got back above. As you can see, it was existent from this point on. So this is not really a support level that we have to hold. It is a support level that price is gravitating around us. It's actually floating here in this region, circling around this entity. So this is not. Yes, we could consider it lost for the moment, but it's not something that necessarily remains lost. So what did we lose? What did we lose with this bearish price action, this super bearish bear market, terrifying crash price action? What did we lose? This level, maybe. This region, not. How about this level? When you look at this level, it is also very important. Confirmation of support, resistance, support. Yeah, we are directly below it. We are directly below this level. It is current resistance to our price action, but bulls are pushing from below against this level. Right now, bears are stronger. The momentum is down, of course. However, will it necessarily remain like this? No, not necessarily. We are directly at this level. There's not a distance of 20% to this level. We're below, let me see. 2.3% below this level. So we are in fact at the level. It's still price action at this level. So what did we lose? We didn't lose anything yet. Anything that is important to us. What is important to us? What is important to our uptrend, to our bull market structure? What is what is it what we want to defend as bulls? This swing high over here, for example. So let's take this swing high. What is also important? Maybe this swing low over here. Not to make a lower low. Yes, it's also something that is important to us. So now you got something to protect. Here you can see 46.3 down to 39 is our core zone to protect the bull market. This is what we want to protect, what we want to hold. Up here, there are no levels we want to hold up here because this is still a battle zone. We want to gain something up here, not to hold it. So yeah, price could move here like this all the time. It's not bearish. It's bearish in case we break something that is dear to us, that is important to us, like this zone. If we break this, this is, yeah, this is very ugly. But strolling along up here, visiting some levels. Yeah, I mean, look at the weekly trend line. We had a weekly trend line that got broken. That's, of course, very discouraging. We see something like this, for example. We had this trend line, it got broken. Yeah, this is discouraging because this was a firm uptrend and the uptrend got broken. Breaking market structure is never, breaking a bullish market structure is never a bullish thing. But it is not necessarily a bearish thing either. So we have to be very, very careful with how we interpret this kind of situation, because our emotions are getting the better of us. They are, well, market structure can be misleading. As you can see with this kind of structure, what you would expect after breaking this is a sharp move down. We didn't get it yet. We are at support. Sure, we could dig into the support and go higher from there. This is very possible. And this is actually the scenario probably most of the professional traders are looking for right now. So how many people do you think are going to buy 38 to 44? A whole lot of people are going to buy there. And not only people, but also institutions. So we can expect extreme upside pressure at these levels. Yeah, let's have a look at some dynamic stuff. And I'm going to use the adaptive range indicator. Switch back to the daily chart. So we had a look at the static situation. We have some key levels. We have some key zones to look at. So now we want to see what is the matter with the dynamic ranges. I'm going to switch to the high time frame settings on this adaptive range indicator. You can get this free on TradingView. Just type in my name, FireflyTA, and you will find it. So what this tells us is what is the dynamic trading range based on the current market circumstances. And as you can see, we're at the very bottom of our current high time frame trading range. We're grinding down. This is usually not a bullish sign that we're grinding down at the bottom. As you can see, when we're grinding at the top, it's usually a sign of a trend developing. So we could see a trend developing down here. But then again, all this region, all of this area is support. If we look back, we had a similar case over here. We had grinding at the bottom of the range, and then this capitulation drop. Something like this is possible in bull markets as well. You could see grinding down and then a monster move down into the lower 30Ks. This is actually possible. It is not something that I mean, it doesn't matter how strong support is at this case, because these moves, yeah, well, they kill everything. So they clear the order books. So this is possible. When you look back in to 2017, the final part of the corrections, well, they were pretty rough, as you can see. It was the final part. The final part was a crash. In each case, except for the very beginning of this trend where it was starting to go parabolic. But here, as you can see, we saw sideways like this, very similar to our current structure, and then capitulation down, sideways, capitulation down. Yeah, this is how it could go. I mean, it's possible to see a deeper move, but this doesn't mean the bull run is over. We have to be open to the possibility that we could go very low, but still remain in the bull market. This is simply because we haven't had any significant correction up to this point. Look at this rally. I mean, there's no correction, not a single one. Maybe this could be taken as a correction, but a tiny one. This is not a full-fledged correction. This is just an attempt to correct a little bit. These are not corrections. These are pullbacks, simple pullbacks, no correction effect. This has been it could be considered a correction, but also a tiny one. And well, we didn't have correction here. This was reaccumulation, uptrend, uptrend, uptrend. Then we had consolidation with tiny pullbacks here, or retracements. These were retracements. Then you can see uptrend, 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 weaker uptrend. And now we are actually in a corrective move. This is the first real corrective move we have. So sure, it could go much deeper because we didn't have any kind of correction along the way. This alone is a sign. I mean, if you look at this kind of trend, it shows you how strong Bitcoin is, how strong the market is. This is super strong. And this super strength doesn't simply run out like this without exploding and making a fat blow off top. This is very unlikely to stop, simply to just run out of steam over here without at least going off in fireworks before. So this is what I would be expecting, considering that in each and every case we saw these grand final moves here, these fireworks over and over again. I mean, Bitcoin always popped, went parabolic, and made a blow off top. So yeah, it's not that far-fetched to assume that this will happen again. Making a top like this is very unusual because it tells us there's no euphoria whatsoever. Euphoria doesn't end in a rounded top. This is not how euphoria ends. Euphoria means emotions are going parabolic. And when emotions go parabolic, price does too. This was doubt, actually. This phase, what we're seeing here is doubt. People started doubting Bitcoin. And they thought, oh, the price, it's went up for so long already. We 20x'd from 3K to 60K. It's overextended. Yeah, I'm in doubt. I'm in doubt this is healthy. This is doubt. So you can see this in price action. This is not euphoria. And when you look at how bull cycles proceed, you see that they end with a euphoria phase. Of course, bulls would want the same. Whales. So the big players, why are they in the market? They are not in the market to see some tiny gains. What they want is that the public comes FOMOing in. They want this kind of move to completely, smash it down, or to have enough exit liquidity at some point. There is no exit liquidity here whatsoever. No exit liquidity. This is not enough to exit the markets for big players. If they really want to sell, they need more pressure. They need the masses. Then what we have seen with Dogecoin, for example, we would want to see with Bitcoin tenfolds. For example, a really, really, really strong move that is backed by large retail volume. This is where the big players want to sell into, because this way they can be sure to sell at the highest prices and to get enough buying pressure for them to unload their entire portfolio, for example, or to unload their positions they want to sell. So we didn't see this yet. This is not the case here. So based on this logic, if you believe what I'm just talking about, if you think this sounds logical, then it should occur to you that we can't be topping here just yet. This is not what the whales want. This is not what Elon Musk wants. He's also invested, and his intention is not to dump to crash Bitcoin. This is not his intention. He has a master plan. He's a smart guy, and everything he says has some kind of effect that he has calculated, or that where he has a plan for. So, yeah, all of these guys want prices to rise. So the question is, why is Elon now trying to accelerate the correction? One possible explanation is that Elon wants this growth to be healthy in order to have more potential towards the end of the year. So he wants price to correct a little bit right now. So he's actually helping the market. He's doing his part so that the market remains healthy and has some more upside potential towards the end of the year. This is a very possible case. I mean, he could use his power this way. And there are other reasons why it would be beneficial to do this. For example, if you would want to accumulate, where would you want to accumulate? Probably the region we just pointed out. I mean, look at 44 to 38. It's a perfect region to accumulate more Bitcoin. It's super strong support. It is a proper correction target. So sure, we could come down here, whales accumulate. You have to create a lot of panic up here for price to actually fall this low in a strong bull trend. This doesn't mean we are in a bear market. We are not in a bear market as long as we close, as price manages to close monthly candles above the support. Once we start closing monthly candles below the lower 40Ks, this is where it becomes a little more dangerous. But even then, transitioning from a bull market to a bear market takes time. It's not something that happens on over the course of 1 month. It's something that happens over the course of at least 3 months or 4. If you look back, let's go to the monthly chart. Here you can see the transition from bull to bear was this candle formation. We had a blow off top here with this selling candle. We had a first panic wick down with buyback. So people thought the rally wasn't over, so they held support here. And then it took a third month to actually confirm the bear market by closing below all of these support levels. And then it proceeded down. This is how long it takes to shift a trend. We didn't have this yet. Look at this. All we had was I mean, it's a doji candle. It's indecision. When we have indecision, it means that there is some battle going on, but it's not a trend change yet. And indecision, I mean, look at this. We had the strong uptrend. We have indecision. We make a correction. We continue up. What's wrong with this? This is perfectly fine bias to have, I think, based on the facts. So yes, you could remain bullish as long as proven wrong. And we know where we are proven wrong. We don't want to see monthly closes below 43K, for example. If we see monthly closes below this level, it starts getting a little spooky. And if we see 2 candle closes below these levels, yeah, it's probably transitioning phase. But even then, let's imagine we would fall into a mini bear market as the one over here. We had a strong run. It had to correct. It went down very, very deep, as you can see, over the course of half a year. And then we had a next rally up. So this was a mini bear market. As you can see, this rally is not very... There's not much to this bull cycle yet. Look at this one. And then this one. Maybe with this. Here you can see they don't even compare in terms of length. So we do have a lot of time left. We could correct deeper and then continue up for a long time. This is possible. It's not out of the question. So even if we were to fall into a bear market, it's probably not a 3-year bear market like this. That's very, very unlikely because everything is in balance. We had a, look, 2015 to end of 2017, a bull market. So we have a long consolidation period, which we call a bear market. Then we have a very, very short 1-year bull run or bull market. I don't count this as bull market, by the way. This was a bear market rally with rejection. And over here, the bull market actually started in terms of price action, not here, because this is the low. This was the spot, because this is where the uptrend started, and this was still a downtrend rally. So yeah, but you could define it however you want. I mean, there's no right or wrong in this case. Yeah, but yeah, as you can see, let me get rid of all these doodles here. So as you can see, this run has been very short. So yes, of course, we could see a very short and deep correction and then continuation up. This would also comply with the supercycle theory, although I'm not following that too much, but it's a possibility. So yeah, I've been talking too much already. Let me see. We were talking about the adaptive range. Let me get rid of all this real quick. Oops. Okay, so yeah, we are currently grinding at the bottom of this of these support bands. They are expanding. They follow the same logic as Bollinger Bands. So expanding bands usually indicate a starting trend or yeah, increase in volatility to one side. So we can expect further moves down. This is possible in this dynamic trading range over here. Let's have a look at the center of gravities. If you're not familiar with this indicator, you can get it for free on TradingView as well. It's called Market Flow COG Overlay. And on this one, we want to enable the center of gravities without the ULTF and the LTF. We want to look at the MTF and HDF because we're on the daily chart. So, and as you can see, these give us a very nice structure on our flow, on our trend and market flow. And as you can see, yeah, these COGs, the center of gravities, they act as entities of mean reversion. So we expect price to come back to these entities over and over again. So for example, if we see prices far above these entities, like here, 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 we expect it to come back down soon after. And as you can see, it's been very reliable so far. Right now, we are exactly at the high time frame center of gravity. So there is no mean reversion to be done here. If we change the trend from bull to bear here, then we would want to look for a mean reversion to the upside to these bands, which will happen eventually. So to trade this, all you need to do is to look for strong support and resistance. Whenever we are far above or below these bands, these COGs, we want to see where is the strong resistance or strong support, and then we expect a bounce there to the COGs. This is actually a very, very effective way of coming up with different setups that have a very high probability of playing out. But they are not as easy to manage, simply because these COGs are highly adaptive and they adapt to price action very fast. So you have to be, you have to monitor what's going on all the time. This is the downside. But on the upside, you do have a very high reliability trading this. So yeah, in terms of COGs, we are good. It could bounce anytime, but right now the pressure is down. So I expect it to fall below the HTF COG for the first time in this uptrend and then come back above. So we had this here, by the way, too. As you can see, we fell below both COGs. We had some consolidation, bottoming price action, went above and started a new uptrend. This is not something unusual. In terms of technical strength, let us have a look at my indicator. Algo. Where is it? Why is it not there? Okay, so I want to look at the high time frame version of Algo. This is my meta-analytic algorithm that is analyzing a huge variety of indicators. You can read this up on TradingView. The MTF version is free on TradingView, so you can get it. It's very valuable. Yeah, just look for Algo score. You will find it, not scoring in this case, score, simple score. And yeah, you can see there are a lot of indicators included in this one. I'm going to get rid of all these points here and include the trend data. So now we can see an assessment of how bullish or bearish the market technicals are. As you can see, when we were here after this very strong rally, technicals were rather bearish, so we had to see some kind of correction to increase the score. But as you can see, I just talked about how this is a tiny correction, not a real correction. If this were a real correction, we would see score rise to the very top. So this move was the first one that actually made score approach the bullish region. But as you can see, the trend was now down, and this bullish technicals are not that effective anymore because the trend is pushing price down. In this case, trend was pushing price up. So we don't even need that high of a score to keep going up. But whenever score is very low, you can see it's at risk of further downside. So in this case, we are still good. The technicals have recovered quite a bit. And yeah, we want to see this dip a little more so that the technicals actually exceed the previous highs here. So then we can see that we might be at a bottom in the for the next weeks, maybe. Yeah, as you can see, it's been the same for the bear market environment. As you can see here, low score means at risk of correction. In this case, score was very low, but yeah, it took quite some time to recover. As you can see, score went up to this point. It took quite some time to recover, and bulls accumulated this region, and yeah, this was very interesting to watch. So yeah, this is it for Algo. So this is good, nothing to worry about. Let's have a look at the log growth curves, maybe. Where are they? Strange, very strange. Oh, I didn't favor them. Okay, so the log growth curves yeah, they show us we've been battling with a 618 log growth curve over here. As you can see, for a long period of time, it was very strong resistance and support. If I switch to the monthly chart, you can see we got rejected on the monthly chart by the 764 log growth curve, and we are just on our way to test the center line, the 0.5, which has been very significant in the 2018 price action over here, as you can see. So this is something we want to closely look at. What will happen there? It would be very good to not lose this. I don't want to see Bitcoin losing this center line. So maybe we see a dip to this region, up, and then V-shape recovery. So this would be my favorite scenario. We will see how likely that is to happen. You can track this 0.5 line. I think it is very important to look at, especially considering it was the entity that produced the exact top in 2019, besides the yearly level we had here. But yeah, this is something to take very seriously. It's essentially an untested level as well. As you can see, we didn't have any kind of test. We just went through here. So testing this and then going higher is absolutely feasible. Yeah, let's look at the lower time frames right now to see what we are currently dealing with. So as you can see, Bitcoin was crabbing along, these crab legs everywhere, and it's still doing crab legs. So yeah, not surprising. We do have this tremendous pressure down, and we have to find a bottom first. So until this happens, we will see these sharp sell-offs over and over again. One word of caution: if you're attempting to long the bottom, or if you think we are at the bottom and you want to enter longs, be very careful. We often see these rallies, very strong up moves like this, here, 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 very strong up moves. But all of these have blow-off tops. Look at the structure, the candle structure. Look at the candle structure here. You can see strong uptrend, strong downtrend. It's V-shape, just in the opposite direction. Here, V-shape, V-shape. Whenever you see something like this, get out. It's probably a crab leg. And once again, we had a V-shape. So now here, V-shape, V-shape. Very dangerous to trade for longs. So right now, Bitcoin is trying to enter this parabolic structure to the downside. Let me show you this. This is what crab legs are, basically, parabolas. So Bitcoin is trying to do something like this, which is not unexpected, because we have weekend, we are on the weekend, the momentum is down, so follow-up dump is very likely. This is why I'm short from this region as well. Very easy trade, by the way. In case you have your invalidation level, the invalidation level for me was the level we have been talking about, or we talked about earlier, basically this level. So if we got about if we would see a close, 4-hour close maybe above this level, I would get out of my short. But as long as we are below its shorting time, yes, sure, bulls can hold this level here, break this parabolic structure, and then pump it. This is very common, especially after we already had a large drop like this. It is quite common to see in the follow-up dump the parabolic structure to break early, and then we see a strong and sharp move up. This is most commonly associated with low time frame bullish divergence as well. Okay, I had to make a little break because I was talking too much. Someone stop me, please. Yeah, I was about to look at the bullish divergences on the lower time frames. As you can see, Bitcoin is just about to move, or has been moving in the past hour quite a bit. So we have this series of lower lows produced here on the price, and we had equal lows on the oscillator, on the RSI. Oops. Okay, so we had equal lows on the RSI, but it is about to get invalidated. So yeah, we would have had bullish divergence here, but yeah, too bad. The parabolic structure is stronger at the moment, so we will have to see how this plays out. If they buy it back really fast, they could maintain the bullish divergence structure, but at the moment, it doesn't look like this will happen because the pressure down is strongest in this area. This is where the parabola becomes extremely strong. Let us have a final look. Let us have a look at our potential targets here. For this, we look left. Let me get rid of the RSI. Okay, and then zoom out to the 3-hour chart. So yeah, let's see where this move could come to a halt. This is a level. Wait, this is a level. This is a level, but it already got tested, so it's not reliable anymore, or not as reliable anymore. What we want is to find our untested levels. So we have to look further, maybe about here. As you can see, the confirmations of support are pretty significant. Yeah, it's been a level since here already. As you can see, very, very nice level. So this is a potential target with a lower low, where price could bottom on this parabolic move. It could, of course, go lower and hit the 42, 43K region right away. This is our target zone. Yeah, but it could also make a higher low. For this, we need a level above, slightly above the recent low we had, maybe like this, as you can see. This level, very important as well. And it is running through this wick, so this is a potential spot for price to find support as well. We could simply go ahead and mark this maybe with a bit of margin here because of downside pressure. So this is basically the zone we are looking at right at the moment. And if price is breaking this, or if price is going to break this, we are looking at the levels pointed out earlier. So yeah, we could see, in case bulls defend this region over here, we could see a rally up to about this region. This is the main resistance we are dealing with here. It's at 52.5 is the first batch of levels, and it goes up all the way to 55. So this is the main resistance zone. We could see a move up here, maybe from here to there, and then some sell-off again. This is also very possible. Let's have a final look at the bull market barrier. I'm going to get rid of all these things. Curve, brush. Okay, so the bull market barrier is also one of my indicators you can get for free on TradingView. And we are exactly at the bull market barrier at the moment. We hit it with our first with this major move down. We hit the bull market barrier perfectly and bounced there, as you can see. The 20-week or 21-week moving average is also in this region right now. So the bull market barrier and the 21 moving average are 21 weekly moving average are often aligned very well. Not always, but in some cases. And this is additional confluence that we can take as a bullish argument. So for now, we are floating in this region above the bull market barrier. We are in the gravity zone, and this means when we are entering the gravity zone and this turns yellow, it means that price is very likely to come to this bull market barrier. This is the barrier, this level. So this has a very strong gravity effect. This means that when price is in the vicinity or is somewhere near that level, it will probably come back here and float in this region. This is what we have to expect with the BNB. This is how it works. Yeah, in some cases, we in the parabolic run in 2017, we saw sharp drops, corrections to the BNB, and then a V-shape up. This has something to do with the fact that the structure was a parabola. In this case, market structure is not a parabola, so it is less likely for this to V-shape from here. It is more likely to find some bottom in this area. So as you can see, the area of the BNB, it goes down to 42K. And what we don't want to see is monthly candles closing in the region down here. So every monthly close below this level is bad. And below this is very bad. So this is what we don't want to see. In terms of levels, I was just talking about that there's major support in this entire region here, up down to 38K basically. So yeah, even if we were to close a monthly candle somewhere in this region, it's not necessarily a bear market. So we have to take price action as it comes, as we get it. A lot can happen here. And we have to see how strong bulls will be at the crucial support down here. We want to see strength. If we see weakness in this area, this is a huge warning sign. So if I zoom out to the weekly, you can see everything is still looking very acceptable. You could even say we are forming some kind of broadening wedge here, but I wouldn't trust the structure as it is right now. If we see further confirmation that, an example, a very strong bounce at the 42 or 43K region that confirms the structure, then it is very likely to be a bullish one. Right now, it is more neutral. Yeah. Okay, I think that's plenty of information. We simply have to see how the next days will play out. A lot of different scenarios are possible. So yeah, trade safe and see you next time.